What's up guys, my name is Pete DiCarlo and today we're gonna get you recession ready. If you've been on the internet the past couple weeks, forums, chat rooms, CNBC, anywhere, you've probably heard that there's a recession coming. Who knows how long or how bad the next recession will be, but we all know that it's gonna eventually happen. Without a major recession happening within the past decade, people are starting to get worried. Now in this video, I'm not gonna go over why I believe or when there's gonna be a recession. I'll do that in the future, but obviously you guys can see what's going on in the news. The point of this video is to get you ready for when the recession eventually happens. See, I'm only 30 years old. The last major recession that happened, I was in high school. I didn't care about a job. I didn't care about finances. I just wanted to play guitar and have fun. And this is the first time our generation is probably going to see a recession. That could be tomorrow, next week, we could be in one now, or it could be 5 years from now. But the point is that you have to take the steps now to be ready for when it eventually does occur. In this video, I want to go over two separate strategies. The defensive / pre-recession strategy and the offensive strategy. The first thing that I want to talk about is the defensive strategy. The best offense is always the best defense. It doesn't matter what great investing opportunities you have or how much money you're making if you're basically handing all of the money away to the government for taxes or to high interest debts. The first thing that you want to do is pay off all of your high interest debt. Now, debt is not always bad. I'll go over that in another video. But if you have anything over 5%, unless it's a mortgage or a cash flowing property, you have to get rid of it. That includes credit cards, car loans, business loans, student loans, any kind of loan over 5%. Now the reason I say this is because even if you were to put your money in a ETF or a mutual fund or even pick some great stocks and make your own strategy, you still should be getting rid of those interest rates. Because if you look at a, say, 7% interest rate, right? And then on top of that, inflation is 3%. So that means in 1 year, you need to make better than a 10% return on an investment just to break even. Because the interest rate on the loan mixed with inflation is basically, you're gonna end up breaking even, which is not what you wanna do. So you need to pay those loans off first. Now, I don't recommend paying off mortgages and real estate loans, especially if it's a 30-year loan, fixed rate, especially if your interest rate's extremely low, because that money can be used elsewhere, and especially if a property is cash flowing. So the first property that me and my friends bought together was a duplex. Actually, the duplex that I'm in right now. So both of these units can easily be rented for $1,000 a month. The mortgage is $1,100 a month. Every single month, this property cash flows $900. The interest rate is like 4.35, I believe. So why would I shovel money into this property to pay it off as soon as possible? It just doesn't make sense. And the next thing I want to talk about is saving minimally 20% of your net income every single month. So obviously, first thing you do, you get your gross pay. If you're a 1099 employee or a business owner, you take the taxes out right away. If not, if you're a W-2 employee, the taxes are taken out automatically. Whatever your net income is, you have to take 20% away, put it right into an investment portfolio, put it right into a savings account, put it into something that is, number one, liquid. I wouldn't put it in real estate in the beginning. Probably couldn't even do a deal with that little amount of money. But I wouldn't put it in something that's not liquid. But the point of this is to make sure you have 6 months to 1 year of your living wage set aside in a liquid account. Honestly, you might lose your job. The recession might be terrible. It could be a depression. We don't know. But you need to think that there is a chance that you could lose your job for 6 months to a year. That is the most important thing. I teach about investing, but the most important thing is that you're not homeless or that you don't default on your loans, ruin your credit score, and have something terrible like that happen. Another thing to go on top of that you can do like pre-recession, or you should just do in general, is to downgrade the stuff that you don't need. If you have a brand new car that you don't really need with a high interest rate, maybe you could trade it in for a cheaper car with a lower interest rate. If you are living and renting in a 4 or 5 bedroom house, but it's just you and a spouse or you and a friend. Think of downgrading to a 2-bedroom apartment or a 1-bedroom apartment. Start to look around at your life and declutter all the things that are draining you financially so you have more money to save and eventually invest. See, personally, I live in the downstairs of this duplex that me and my friends own. I live here with my brother and my girlfriend. We could easily go get a bigger house. We could go probably get a 4 or 5 bedroom house in a really nice area in Delaware County. But there's no need to. I'm happy here. All of my needs are met. It's a great neighborhood. I have all the room that I need here to live my simple life, and therefore I live pretty cheaply. All of my expenses every month are only $500. So that means anything over $500 a month I make, boop, straight into investing. Now we get to move on to my favorite part, which is offense. The very first thing that you need to do when making an offensive plan is define what type of style investor do you want to be. Do you want to be an active investor like myself, constantly hunting down real estate deals, checking the stock market 5, 6, 7 times a day, learning how to read, technical analysis, fundamental analysis, or do you want to be somebody who just wants to put money in a mutual fund or, some ETFs? Being a passive investor works really, really well if you are already working a great job, you love what you're doing, or at least really like what you're doing, and you make good money. What you can do is, instead of spending all the time learning about everything I spoke about earlier, you can just take your money, hand it to a financial advisor, or make your own brokerage account, buy some ETF, buy some single companies that you enjoy and that you would want to hold long term, and well, there you go. The most important thing if you're going to go with that strategy is to understand fees, and to, if you end up getting a financial advisor, understanding that they need to be a fiduciary and really knowing what your fees are going to be. There's a great book by Tony Robbins called Unshakable. I really recommend you reading it. It's about long-term passive investing and primarily doing it with a great financial advisor, how to find one, what requirements you need to have. I'll link the book below. If you've decided that passive investing is not for you, you can do what I do, which is active investing. There are many types. You can be a day trader, you can be a swing trader, you can actively invest in your own business, you can purchase and flip real estate, you can do long-term hold real estate. There's so many different things that you can end up doing. Now, say that you really enjoy the stock market and you want to be an actively passive investor. You might work a great job, you might want to not just hand your money to somebody, and you might want to learn. Well, then I really recommend now, not when the recession happens, because you have to learn all of this. You can't just be like, oh, the middle of a recession, S&P's down 20%. I'm just gonna learn a year's worth of stuff in a week. That's not how it works. So you need to take the time now to understand fundamental analysis. Learn how to evaluate companies. Learn what companies are exposed to what. Is a company exposed to the China trade war? Learn how to read balance sheets. Learn how to read income statements. Then I would recommend picking 10 to 15 companies that meet all of your criteria. And I'll make a video on what meets my criteria to help you out in the future. Find out what meets your criteria perfectly, and then say you have $10,000, split that up in percentages equally between those 15. Then every single week, every single month when you get paid, dollar cost average into those positions, whether the market's going up or the market's tanking. Another option is, if you want to be even more active, is to be a swing or a day trader. If you want that lifestyle, then you really need to start learning now. You need to learn to read patterns, charts. You need to learn how to scan for movement. You need to learn how to use brokerage accounts and software like TOS and Market View. I'll go over all this in future videos. Make sure to like and subscribe and smash the like button. I'll go over this in future videos, so make sure you like this video, subscribe to the channel, and I'm going to be putting out a lot more content primarily based around this. This is going to take time. You're probably going to lose money. You're really going to get discouraged because day trading and swing trading is not easy. Think of it this way. How many billionaires, with a B, have become billionaires from day trading in the stock market? 0. Yeah, there are a lot of millionaires, and that would be amazing to be a millionaire, but You really have to become the best at what you do. 90% of people who are actively trading and day trading in the market lose money consistently over a long term. So if you don't want to be part of that 90%, you have to make this a part of your life. Now, the final offensive tactic that we're going to talk about is real estate. If you want to invest in real estate, especially when the market's going down, especially when a recession occurs, you have to be doing all of your research. You have to know your market in and out. You have to understand real estate, how a property cash flows, what makes it cash flow, how to manage properties. You have to learn all of this now, because like I said, in the thick of it, you're not going to be able to learn during a recession. I recommend you take the time to learn. Watch my future videos, watch plenty of people on YouTube, and most importantly, build a team. Learn the best contractors in your area. Learn the best landscapers in your area. Learn who the best agents, who the best brokers are in your area, because that is extremely, extremely important when you want to go buy a property, is to build a great team. Find other potential investors who might be friends or family or coworkers or even your boss. So find these people, build these relationships, build this team before you need to use it. Now, the final prepping offensive maneuver that you can do, and this pertains towards real estate if you own a property like myself, is to cash out, refinance your wedged deal equity in a property. A wedge deal is basically buying a property with equity built in. Say you buy a property for $100,000, you put $20,000 worth of work in it, and after that it gets evaluated and appraised for $200,000. You just made 80 grand. And that is built-in equity. You now have $80,000 that you can refinance and get access to that money. Now, if you go blow it on dumb stuff, that's not smart. But if you were to refinance that mortgage, use that built-in equity to go buy another property in the thick of a recession, that's a good idea. Especially now, because interest rates are extremely low. I just got an offer to get my place refinanced for like 4.4%, which is basically what I ended up getting in the beginning. But now I can personally cash out with my friends a lot of the equity that we've built into this property to go fund deals in the future. Well, there you have it, guys. I wanted to make this video relatively brief because I really believe that in this next recession, there's going to be a huge wealth shift change. That's why I decided, for the longest time I want to start a YouTube. But that's why I realized with how everything's happening right now, with how my life is right now, I would love to help you guys get ready to take advantage of what is going to happen in your future. And it may not be a recession. Recession may not happen for 20 years. But what's important is that you guys start to build these habits to make better choices in your life and to get ahead in life, to give your family a life you've never had, to give yourself the life you've never had, to not have to live paycheck to paycheck. So that's what this YouTube entire channel is going to be about. I wanted to make this video as introductory to kind of understand the way in which you want to work towards the next coming years. With that, I want to thank you guys for watching. Like, comment, subscribe. I'll see you next time.